Hello and wish you all a very happy new year 2026. I would like to review the year gone by and share our views on what lies ahead in 2026. We've been guiding our investors to invest in gold, silver, and the US equity markets, driven largely by AI investments. And the performance of all of these three categories has been exemplary in the year gone by. Gold was nearly 64%, silver was up almost 145%, and the US markets also returned very good double-digit returns. The Indian markets performed reasonably well in spite of the high valuations and the tremendous headwinds which we witnessed during the year in the form of sanctions by the US and Operation Sindoor. The disappointment last year was on the duration side. While we had expected that the yields would come down, they came down predominantly on the lower side, with the RBI cutting rates by close to 125%. Unfortunately, this rate cut was not transmitted at the longer end, and in fact we had the longer end give negative returns. The year was characterized by geopolitical and economic turmoil as the US went into negotiations with its trading partners, and India was at the receiving end of this with additional sanctions imposed on us. Lack of a deal between India and the US and imposition of these additional sanctions was a big dampener. In spite of all of this, overall it was a very satisfying year in terms of both economic growth and the stock market performance, although the small and mid caps bore the brunt, with many stocks ending more than 30% down last year. The first half of 2026 is not expected to be very different. We expect the trends of 2025 to continue during the first half. Investors will have to navigate a landscape where risk and resilience coexist. We do not foresee any major downside risks going forward. The global economic environment points to a steady growth rate, with a few rate cuts coming from the Fed and also from the emerging markets. The relative attractiveness on the Indian markets could see some inflows into equity by FIIs. Just to put things in perspective, the S&P 500 is now trading at close to 28 times. The Nasdaq is trading at close to 35 times, and the Indian markets are trading at roughly 23 times. Domestic inflows are expected to remain strong, but we have a lot of IPOs coming in, so there is expected to be some amount of outflow into these IPOs from the domestic investors. Stock-specific opportunities will be there, and we continue to back actively managed funds managed by agile fund managers. In fixed income, credit opportunities will be abundant, and towards the later part of the year, we could see some rally in long bonds. Pre-IPO opportunities are abundant, and fund managers are now allocating a small percentage of their allocations to these opportunities. HNI investors having access to these opportunities should allocate some amount of money to unlisted or invest through funds which are focusing on the pre-IPO and the unlisted space. Gold, silver, and the US markets will continue to do well, and we would recommend investors to continue with the allocations to this market, as they provide a good amount of diversification. Gift city based funds for both outbound investments by Indian investors and inbound investments into India for overseas investors are taking off, and we believe that this route will be very attractive for both these sets of investors.